Hi students, O-Levels Online presents the video lecture series for other adjustments of financial statements. In this video, we will discuss the key factors consideration during inventory valuation. This video series is helpful for those students who are appearing in Cambridge O-Level upcoming exams, either in June or November, through CAIE or IGCSE or IGCSE, 9-1, for Accounting 7707, or 0452 or 0985. Let's begin with the lesson material. In this slide we will discuss the key factors and related subpoints. The first factor is costing methods. The selection of costing methods is a crucial factor in inventory valuation. In this method, the first point is, first in first out, assumes the oldest inventory is sold first. This method may result in lower cost of goods sold and higher ending inventory values during periods of rising prices. Second one is, last in first out, assumes the most recent inventory is sold first. This method may result in higher cost of goods sold and lower ending inventory values during periods of rising prices. The third point is, average cost output method calculates the average cost of all inventory items, smoothing out price fluctuations over time. The second factor is market conditions. It will also play a vital role in the inventory valuation process. The first point that need to consider in this factor is price fluctuations. It consider how market volatility and inflation or deflation impact inventory costs. The second point is supply and demand scenarios. Understand how changes in supply chain dynamics and consumer demand affect inventory value. The third factor is inventory turnover. Need to consider. The first point in this factor is turnover rate. A high inventory turnover rate indicates that goods are sold quickly, which may reduce the risk of obsolescence, but could require more frequent valuation adjustments. The second point is obsolescence. Items that are slow-moving or obsolete goods need to be valued carefully, often at lower costs. Let's check some other factors too. The factor number 4 is physical condition of inventory. In this factor, we have two subpoints. The first one is damaged or expired goods. Inventory that is damaged or near expiration may need to be written down or written off. The second subpoint is quality control. Consistent quality checks ensure that inventory is correctly valued according to its condition. The fifth factor is regulatory and accounting standards. In this factor, we have two subpoints. The first one is GAAP or IFRS compliance. This factor ensures that the chosen valuation method complies with generally accepted accounting principles or international financial reporting standards during the process. The second sub-point is tax implications. Different valuation methods can impact taxable income, so understanding the tax implications is critical during the selection. Let's check some other factors too. The factor number 6 is technology and data accuracy. In this factor, we have two sub-points. The first one is inventory management systems. Robust systems ensure accurate tracking and valuation of inventory. The second subpoint is data integrity. Accurate data collection and processing are vital for making informed valuation decisions. The seventh factor is industry practices. In this factor, we have two subpoints. The first one is benchmarking. Align inventory valuation methods with industry standards to ensure competitiveness. The second sub-point is seasonality. Consider how seasonal variations affect inventory levels and valuation. The last but not least factor is financial reporting and business strategy. In this factor, we have two sub-points. The first one is impact on financial statements. The inventory valuation method chosen directly affects the balance sheet, income statement, and cash flow. The second subpoint is business goals. Align inventory valuation methods with broader business strategies, such as cost minimization, profit maximization, or liquidity management. These are the factors we would consider during the inventory valuation process. Let's move to another slide. Positively, you got the clear understanding of the key factors considered during inventory valuation, as per your syllabus and examination point of view. If you have any query regarding the lesson, kindly ask in the comment section of this video. We will discuss the bank reconciliation, definition and explanation in the upcoming video. You can download the related formats and lesson material through the link provided below. Thank you for watching. I hope you learned something new today. If you did, like and share video with other people to learn from it. And please subscribe my channel if you want to see more videos like this. Take care of yourselves. I'll see you in the next lesson. Goodbye.